Using an FHA loan for a 15-year mortgage is not a super popular idea, but is a good idea. I think it's a great idea, especially after the big mortgage insurance premiums were reduced for 2023, and that's what we're going to talk about today. So this is really exciting news, and I already did a video of this on what the changes are for FHA. You can find that here on the channel. But 15-year, the 15-year mortgage also has very similar reductions in the cost to do it. But a lot of people don't think of using a 15-year loan with mortgage insurance, right? Why would you get a 15-year loan with mortgage insurance? You probably have a bunch of equity. Well, we're going to go through a few reasons why that might be a good idea today. But before we do, let's kind of talk about why we're talking about this. So uh, in uh, in March of 2023, FHA reduced its mortgage insurance premiums, and a lot of folks get mortgage insurance premiums, which is FHA government insurance, confused with PMI, which is private mortgage insurance, which is what you have to get if you have a conventional loan with less than 20% down. So there's PMI and there's MIP, and people kind of use them interchangeably. At the end of the day, they're essentially the same thing, but you can't use FHA mortgage insurance rates on a conventional loan. And also conventional loans, the mortgage insurance is based on how much down payment and what your credit score is. FHA MIP, the mortgage insurance premium, does not, it's required no matter what, pretty much. And it's not only is it required no matter what, it's fixed. So it doesn't depend at all on how much down payment, how much equity you have, or what your credit score is. If you qualify for an FHA loan, you automatically qualify for the mortgage insurance premium. And that's one of the reasons why you would use a 15-year FHA loan as opposed to a 15-year conventional loan, is just qualifying. So FHA has two mortgage insurance premiums, right? So there's an upfront mortgage insurance premium, which is 1.75 percent of the loan amount. And basically, you take the loan amount times the upfront mortgage insurance and you add that to the loan amount. So you're actually borrowing 1.75% more than your actual loan. And that's just kind of worked into your payment. It's a few dollars a month potentially. Now, the upfront mortgage insurance premium did not change in 2023, only the monthly, or it's the annual, but the annual you pay monthly. So I call it monthly because you pay it monthly, but they call it annual because it's an annual amount, and you divide it by 12, and then that gives you what your monthly payment is. So essentially how it works is there's an annual mortgage insurance premium, which was just lowered. You times that by the loan amount, and then you divide that by 12, and then that's added to your monthly mortgage payment, which was reduced after March 20th of 2023. Now, the mortgage insurance premiums are dependent, or they will fluctuate a little bit depending on how much down payment you put down. So here's an example of a 15-year fixed before March 30th. If you were to get a home, if you were to buy a home that was less than 625.5, because that was the loan limits back in 2022. If you were to get that, it was 0.7%. After March 30th, 2023, first of all, the loan amounts went up. So if it's under 726.2, it's only 0.4%. So that's good. That almost got cut in half, right? From 0.7 to 0.4. So that's going to make a huge difference if you're using a 15-year FHA mortgage. Now, if your loan is greater than the conventional single family limit, which it can be in high cost counties. So if you live anywhere on the coast in California or on the East Coast, they have higher limits that are available. They call it high balance. And so you can use one of those high balance loans, but the mortgage insurance premium is a little bit higher. It went from 0.95 to 0.65. So there was still a huge a huge drop in that monthly cost. So that's going to be good news for the folks on the coast that want to use FHA loans. Now, if you have more than a 10%, down payment, uh, it is then it looks like it's the same from 0.7 to 0.4. If you have more than a down payment, more than a 10% down payment, and you're under 78% loan to value. Wait, what is this one? Okay, so if you're over 78%, more than 10%, if you're more than 78% loan to value, less than 90%, it goes from 70 to 40. If you're less than or equal to 78% loan to value, 0.45 down to 0.15. So essentially, if you have 78, so if your loan amount represents 78% of the value of your property, you could pay as little as 0.15% on your monthly mortgage insurance premium. So let's kind of show you an example of what this would look like on a 3.5% down. So most people use FHA for the 3.5% down payment. Not many people will put more, but you can put more. And if you put more down, it's cheaper. So it makes sense to do. Just a lot of people don't know about it, and a lot of loan officers don't discuss it with anybody. So here's an example. We got a 15-year mortgage. We got a loan amount of $500,000. Our upfront mortgage insurance is going to add $87.50. So our loan amount is $508,750. Now our old loan amount, our old mortgage insurance premium would have been $296.77 added to our monthly payment based on this purchase. With the new mortgage insurance, it's $169. It doesn't sound like a lot, but over time, that's a significant savings, especially if you keep this loan for the whole 15 years. That's tens of thousands of dollars that you're going to end up saving. And what I recommend a lot of people do is this gives you the opportunity, instead of just paying the $169.58, pay the old mortgage insurance premium, pay the $300 instead of the $169, and then see how fast that pays down the balance of your loan. That's a really easy calculation that a lot of loan officers can do for you. Well, experienced loan officers, professional loan officers, that if you make a little bit extra payment every month, it will reduce your principal balance. So you'll actually pay off your loan faster, which is going to save you all of that interest for those years that you're not paying your mortgage. Now, this is a big win for the flexible FHA loan, because the 2023 loan limits went up to $726,200, and high balance, it's over $1 million. With the reduced mortgage insurance premiums, that's giving you a lot more purchasing power, and there's a lot higher debt to income ratio than conventional. And that's the reason why. So if you have a bunch of equity and you want to pay off your loan as fast as you can, and you want to go into a 15-year fixed, but maybe your credit isn't perfect, and you just can't qualify for a conventional loan, then look at an FHA loan. Yes, there's mortgage insurance, but the mortgage insurance is negligible compared to the opportunity to qualify for the loan. It's a much easier loan to qualify for than conventional, and it's a good way to pay off your house faster and save tens of thousands of dollars in interest. Again, the median home price across the U.S. in fourth quarter of 2022 was $467,700. So when we're looking at FHA loan limits to $726,200 and over $1,000 in high cost limits, the FHA loan is going to be applicable to almost anybody who's out there. So that is why I say it's important that you're working with a mortgage expert, an experienced professional that is not just going to tell you what you want to hear, which is what these call center guys do. They're just like, oh, yeah, don't worry about it. No, don't worry. Just give me your credit card. Let's just fill out this application. No, an experienced loan officer is going to look at all your options. They're going to give you an option for a 15-year conventional. They're also going to give you an option for a 15-year FHA if they think that it's going to make a significant difference, but they know that it's an option. And they're also going to go and they're going to reference the guidelines and they're going to research all of your options and present you with all of your options. Now, how do you find a loan officer that will do that? If you know somebody, fantastic, reach out to them. If you're not sure if they give you the right answer, or if you don't know anybody, that's why we created findmywayhome.com. So you can find an expert near you if you go to the website, or there's a form there that you can just tell us what your issue is, and I'll match you with somebody on our expert directory that can help you answer your questions on this. Now, none of these things, none of these underwriting guidelines are black and white. And that's why it's so important to work with an experienced mortgage professional, because they know the nuances, they know the options, they know the alternatives. They're going to do the homework, they're going to fight for you. So if you have any questions, again, you can go to findmywayhome.com, or feel free to ask me a question or leave a comment below if you're watching this on YouTube. And I'm happy to answer any question that you have, get you pointed in the right direction. And hopefully, if you've been having challenges up to this point, I'm glad that you found us, because I'm confident that we can help you find your way home. Thanks. We'll see you next time. Bye-bye.